Are you looking for a way to accelerate your returns in multifamily real estate? In this video, I'm going to walk you through the value add strategy, how it works, what it is, so you can start forcing appreciation and making your money work harder. So make sure you hit the subscribe button right now so you don't miss more videos about building wealth through multifamily real estate. And if you don't know me, I'm Seth Ferguson, a 12-year real estate veteran, host of a real estate TV show, host of a real estate investing podcast, and the author of the real estate book, Sell for More. So let's get right into it and talk about the value add strategy when it comes to multifamily real estate. And the value add strategy really comes down to two things. It comes down to increasing rents, increasing revenue, and decreasing expenses. The reason why this is so important is the way multifamily real estate is valued. It's valued using the income approach. And if you're not familiar with this approach, I'll put the link right up here to the video I did on explaining how the income approach works. So basically, in a nutshell, the more revenue we have and the lower expenses, that increases the net operating income. And the net operating income is the golden nugget when it comes to valuing multifamily real estate, because investors will pay more for each dollar of NOI the property produces if it's a great asset and it's well positioned. So how do we affect the increase in revenue and the decrease of expenses? Well, this is where the value add strategy comes into play. I like to break down the value add strategy into two components. The first component is physical improvements. Physical improvements can encompass a wide range of improvements, but basically what we are doing is we are improving the physical aspects of the property to make it more attractive for tenants, and that means they're going to pay more rent, which then increases our revenue. So let's talk about some example physical improvements. Well, interior renos. So let's say we have a 1990s vintage building. Well, chances are the kitchens are going to be lots of oak and it's not going to be as appealing to today's tenants. The kitchen needs to be done anyway, so let's renovate the kitchen to modern standard and make it look really nice. That's going to attract more tenants, and in turn, we're able to charge more rent, which increases our NOI. Exterior renos too. So let's say we have really dated siding, maybe just the paint colors are old and dated. By updating that, by modernizing the outside appearance of the property, we're going to make it more attractive. That's going to attract a better tenant profile, what we're looking for, and then we're also able to increase the rents. What about repaving the parking lot, sidewalks? Again, these are all things to improve the curb appeal of the property to make it more desirable for tenants. Replacing the roofs or roofs, depending on which side of the country you're on. Then we can add a fitness center. Adding a fitness center, maybe it's a barbecue pit outside. Or lots of times now we're seeing derelict tennis courts that are never even used. Well, why don't we turn that space into a dog park for tenants? Maybe a playground, maybe adding that barbecue pit there, maybe adding a soccer field. All of these things are about improving the property, the physical components of the property, so then that way we can bump up our NOI and then reduce our expenses. So those are some physical examples for the value add strategy. Then we hop on over to the other side, which is operations. So operational. So operational improvements are even more varied than physical improvements. So we can do something as easy as increasing rents. That's easy to do. If we acquire a property with below market rents and everything else physical wise about the property is great, all we have to do is implement a rent increase strategy, and that in turn bumps up our NOI. That's a great scenario. And we can talk about advertising, your leasing strategy. Maybe the current owner is targeting the wrong demographic. Maybe there's a better way to reach a better tenant profile, a tenant profile that you desire for the property. Changing up your leasing strategy can bring in different leads, better qualified tenants. Maybe it's as simple as retraining the leasing staff so their conversion rate goes up. That's going to decrease your ad spend, so you're spending less money and then you're converting more leads and leasing up the property quicker. Maybe it's turn time. So when a tenant moves out, instead of spending 45 days refreshing the unit before the next tenant can move in, maybe you can decrease that down to 30 days. But multiply that 15 days of occupied unit by 200 units, let's say, if you're running a larger property, that's a huge impact on your bottom line and the NOI. Maybe you're increasing revenue opportunities by adding premium parking, a trash pickup service, maybe some rentals in there, yard rentals if you have some fenced in area. All of these things will bump up your revenue and then decrease your expenses. And speaking of decreasing expenses, maybe it's time to shop around your insurance policy for the property. Maybe it's time to dispute your property tax bill that the past owner didn't do. Maybe you can decrease your property taxes. All of these things will decrease your expenses, which in turn will boost up your NOI and value your property higher. I could go on forever about operational value add because really the sky's the limit. There are so many things you can do to decrease expenses at the property and bump up your revenue, which in turn increases your NOI. So in a nutshell, value add investing when it comes to multifamily is all about increasing your revenue, decreasing your expenses, which in turn boosts up your NOI and increases the value of your property. So we have physical components, things we're actually doing to the property like renovations, but then we have operational components that encompasses management, rents, turn time, leasing strategies, advertising. Maybe it's as simple as rebranding the property and having fresh colors and a new look, a new brand, and that will attract a different demographic. All of these things come into play, and almost every deal has a little bit of column A and a little bit of column B, and you really want to force that appreciation and make your money work as hard as possible. So if you'd like to learn more about the deals I'm currently doing, head on over to callseth.com and set up a quick 20-minute phone call with me. And if you like this video, if you found this useful, hit the like button, leave a comment, let me know what you think, and until next time, happy investing.